Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, welcome back from the long weekend, and the market has been somewhat in a whipsaw price action after the topside challenge for the Australian dollar did briefly penetrate the highs around 64.90 to 65 cents before reversing sharply and plummeting on Monday, and now poses a further threat to the downside as the dollar index, which measures the greenback strength against a basket of six major currencies, surges to an intraday high of 106.69 and to a fresh high of 11 months, and now poses a threat that we could see rise up towards 107.20. This in turn would see further risk on the Australian dollar. A break of 63.5 would give further scope down towards the region, seen somewhere around 62.80, and maybe even where the base holds at 62.35, with a resistance seen at 63.90. All eyes look to the RBA today, with an expected hold on interest rates, and presently stand at 4%. Looking ahead to this week, we've got quite a lot of data out. Looking to New Zealand, we have the official cash rate, which stands around 5.5. And then moving on later into the week, we've got the main event being the non-farm payrolls, which expects to see a rise of 169,000 jobs added. And along with that, the unemployment slipping from 3.8% to 3.7%. Looking to the euro, the market is somewhat negative, and it's still from a midway point on the RSI rejected, puts further threat, and that is towards a region seen somewhere around 104.15 and reassess from there. The bears are still holding to this downtrend and therefore look towards this region. I felt that we could see a bounce off the lows around 105, but that hasn't emerged due to the dollar index jumping above the 106 area. Any topside challenges sees resistance around 105.20 to 105.80. In dollar yen, the market rejected the key point level, which was seen at 148.60. Failing to break there, the market is reversed and looked back towards the top side area of 150. Now, as I mentioned last week, there is a threat of an FX intervention from the BOJ, and therefore could see much volatility. Now, we do see a break of 148.60. That would expose the region down towards 146 to 144.5, where the base holds. So keep an eye on this top side level in case we do see a significant downturn. The sterling still remains somewhat heavy after the topside challenge failed to break above 122.80 and now looks further to the downside, with the target seen around 120.20, which was the start back in March for this bull trend. To see if the market does respect this level and reverse and put in a somewhat mild correction. Gold took out the level of 1,850 after reaching its objective, crushed, and now looks lower towards the region of 1,770.80. I feel is where the market is looking next. Towards this region may find eventually a correction, but the trend is somewhat strong. As we look into this pattern, we can see the market has continued to post lower lows and lower highs. Any upside attempts, well, the resistance comes in around 1,836 to 1,848. But overall, still from a broader picture, there is still some room to take the challenge lower, at least down towards these lows seen earlier this year, which was somewhere around the region of 1,800 figure 6. Wrapping up with oil, well, since that topside rejection of around 92, the market has posted low and lows and lower highs, and now from the recent weakness, along with taking out the level of 88.35, exposes the region seen at 85.25.45. There is room there for the technicals, so I don't feel it will be too much of a challenge to get to that bottom side of the range before reversing. Well, that's a wrap. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoyed a great start to the day.